Welcome to our distinguished chief guest, Sri M. Nagaraju, the Secretary, Financial Services, Government of India. And because of the exigencies which has been impacting us, we are robbed of his physical presence today to be with us. We are poorer by this, but we are going to be richer by the very insightful talk and his cutting edge knowledge in financial services. It is also my privilege to make an introduction about the very distinguished career and about the person Mr. Nagaraju is. He is graduated from the University of Hyderabad in philosophy, and I believe he was the chairman of the student union at that time. It shows about his spark as well as leadership. He was allotted to the government of Tripura and belongs to the 1993 batch of the Indian Administrative Service. He worked in various capacities in Tripura, a frontier state with distinction. He was as a district magistrate, worked in tribal welfare, and several important departments like health, finance, industries, in which he made a mark, he left a mark, and he made a contribution, which is lasting. During 2004-8, he went over to serve the Ministry of Finance and the coveted Department of Economic Affairs as a director, looking over the infrastructure projects of large scale as well as scope. He had managed these projects with distinction, including many metro projects at that time. Later, the government of India had deputed him as an advisor to the executive director at the World Bank in Washington till 2012. And he worked with the bank closely in a critical time of financial crisis when the housing subprime lending engulfed the world economy, and the bank was at the forefront finding solutions and overseeing the recovery. In this particular period, he had worked closely with the G20, G24, and the G11 in various discussions and gained intimate knowledge about developmental finance. Incidentally, Mr. Nagaraj Garu continues to be a visiting fellow. He was a visiting fellow at the University of Pennsylvania between 2012-13. After coming back, he helmed the Ministry of Coal at a very critical time when there is a lot of events had overtaken the ministry, which has to be rebuilt as additional secretary and largely exposed to the mining and infrastructure sectors. He served on the several boards of the coal and infrastructure companies. He was appointed to the important charge of Secretary Financial Services on 19th August 2024. And India's story is the story of financial inclusion, which he's going to talk about. I only would like to mention to Mr. Nagaraju one small detail. If I do not mention, I would be failing in my duty. The banking sector reform, as you know, it was started by M. Narasimhan. And the Narasimhan 1 and the Narasimhan 2 committees were seminal reports which had given strength to the Indian banking sector and gave a new impetus. So the college has a deep association with the banking sector reforms and later insurance sector reforms under our Doyen chairman, Mr. Narasimhan. So the wheel has come a full circle, and today we are going to listen from you. What is the future of the banking services? What is the story of the financial services going to be? With these words, I once again welcome you, and I would have been happier to have you, but things are different. At least we have the benefit of having you here, and technology is bringing you to the portals of ASCI today. Thank you.
Thank you. Thank you. Thank you very much. Respected Chairman, Board of Governors, Sri K. Padmanabhi Garu, DG ASCI, Dr. N. Ramesh Kumar Garu, other members of Court of Governors, faculty, staff, and distinguished guests and friends. I'm delighted to be part of celebrations for 69th Foundation Day of the ASCI, Hyderabad, and I'm deeply thankful to the DG and the Court of Governors for inviting me to deliver the Foundation Day lecture. I was in fact looking forward to visit the institute and interact with all of you. But unfortunately, due to unexpected requirement in Delhi today afternoon, I could not be physically present to deliver my remarks. I'm extremely sorry for this, and this is my loss. I think I'm being aware, as a student, I've been visiting Hyderabad several times. In fact, from Gachibowli in the west, in my doing undergrad in Nagarjuna Sagar also, we keep visiting Hyderabad. We always heard about ASCI, its role in public administration. Now, since then, I have noted ASCI has been playing a crucial role in strengthening public administration and the corporate governance in the country by providing high-quality training, research, and consultancy. The contribution of ASCI in building leadership capacities, strengthening policy formulation and implementation skills, and fostering innovation in management practices is well recognized in the country, and the Institute has made significant contributions in promoting good governance and supporting country's overall socio-economic development. I take this moment to congratulate the Court of Governors, the DG, and the faculty for their strong sense of commitment to further the growth of India. Now, coming to the topic I have chosen, I think all of you are aware, financial inclusion has increasingly been recognized as a key driver of economic growth and poverty alleviation all over the world. It is also noteworthy to state that 7 out of the 17 UN development goals of 2030 view financial inclusion as a key enabler for achieving sustainable development worldwide by improving the quality of lives of poor and marginalized sections of the society. In a country as diverse and as dynamic as India, poverty is not only an economic challenge, but a structural challenge. And one of the most transformative ways is to facilitate access to every citizen to a formal financial system, irrespective of geography, gender, caste, or income. FI is far more than opening a bank account. It is the gateway to opportunity and empowerment. It gives households and individuals the ability to save safely, to borrow responsibly, to withstand shocks, and to invest in education, health, and enterprise. For the poor, financial access is both a shield and a ladder, protecting them from adversity and enabling them to move towards prosperity. Over the past decade, India has not merely expanded access to financial services, it has fundamentally reshaped the architecture through which citizens participate in economic life. Today, I would like to highlight India's major achievements and then outline the road ahead, which demands institutional coordination, technological maturity, and continued policy innovation. Let us first reflect on the remarkable strides we have made. India has transformed from a landscape of exclusion to one of unprecedented access, driven by innovative schemes, digital infrastructure, and regulatory resolve for financial inclusion. The RBI's Financial Inclusion Index, a composite measure of access, usage, and quality, stands at 67.0 as of March 2025, a robust 4.3% increase from 64.2 the previous year, and a staggering 24.3% rise since 2021 deadline, so baseline. India's journey for financial inclusion has been nothing but a miracle. The launch of Pradhan Mantri Jan Dhan Yojana in 2014 marked a watershed moment, bringing more than 57 crore individuals into the formal banking system. This unprecedented scale of first-time bank account openings has given millions the ability to save, transact, and access credit, often for the very first time. Jan Dhan has been instrumental in developing savings habit among the neo-bank. Jan Dhan accounts hold balances of about 2.75 lakh crore as of today, which translates to approximately rupees 4,815 per account. 78.2% of Jan Dhan accounts are opened in rural or semi-urban areas, and 55 accounts are opened by women. This has been the real women empowerment, bringing financial independence and also making them proud recipient of assistance under various schemes of both central and state governments. Complementing this has been the strength of JAM Trinity, Jan Dhan, Aadhaar, and Mobile, a framework that has allowed us to shift from simple account creation to verifiable identity, targeted benefits, and frictionless digital transactions. Direct benefit transfers have eliminated leakages, empowered beneficiaries, and improved transparency in welfare delivery. A total of 3.68 lakh crore has been transferred through DBT in current financial year only. And the estimated total savings till now, since the DBT started, have been approximately 4.31 lakh crore to the country. The initiative of providing banking infrastructure, like banking touchpoints to cover the unbanked and uncovered villages, was undertaken under PMJDY with the aim to cover every village with at least one banking outlet, branch, or BC within 5-kilometer radius. Jan Dhan Darshak, through its GIS mapping facility, is facilitating actually in the DFS in identification of unbanked inhabited villages not having a banking touchpoint within a distance of 5 kilometers. Around 99.9% of villages are now covered either by a bank branch or a BC or postal within a 5-kilometer distance. The total mapped banking touchpoints are today 21.75 lakh, which includes branches, BCs, ATMs, and IPPB centers in the country. Furthermore, the emergence of UPI has made India a global beacon of real-time digital payments. Processed 2,047 crore transactions worth 26.332 lakh crore in November 2025, last month alone, reflecting a 22% year-on-year growth, accounting for 85% of India's total digital payments and nearly 50% of worldwide real-time transfer. This is not just technology, it is also empowerment, enabling a farmer in Bihar to receive subsidies instantly or a vendor in Telangana to accept contactless payments seamlessly. Complementing this are targeted interventions. Under Pradhan Mantri Mudra Yojana, 55.39 crore loans for 37 lakh crore have been sanctioned, with a focus on women and marginalized groups. 67% of Mudra loans are sanctioned to women entrepreneurs, and 51% of total sanction are to SC, ST, and OBC entrepreneurs. The move has made formal credit available for those who need it the most. The percentage share of Shishu loans has come down from 88% in 2017 to 51% in 2025, with a corresponding rise of Kishore loans from 11% to 45% during the same period, which is a clear indication of enterprises growing in size by absorbing Mudra credit. Meanwhile, Stand Up India scheme has sanctioned 62,790 crores to SC/ST beneficiaries and women-led beneficiaries, greenfield enterprises, igniting grassroots innovations. It is also crucial to highlight the Government of India's steadfast support for the informal sector through transformative initiatives such as PM Swanidhi and PM Vishwakarma, which are pivotal in advancing the goal of financial inclusion. PM Swanidhi has successfully formalized street vendors nationwide by providing collateral-free credit and promoting digital payments, resulting in a disbursement of 1.01 crore loans, benefiting 16 lakh street vendors. PM Vishwakarma scheme, which was launched on September 17, 2023 by the Honorable Prime Minister to provide end-to-end holistic support to traditional artists and craftspeople engaged in 18 identified trades through access to skill training, collateral-free credit, modern tools, market linkage support, and incentive for digital transactions. The scheme aims to preserve and promote traditional craftsmanship in the nation and foster employment opportunities to the individuals engaged in the identified trades. Under the scheme, 5.21 lakh loans have been sanctioned for 4.36 loans have been sanctioned and 4.3 loans have been disbursed. Jana Suraksha schemes were launched with a clear objective of providing affordable insurance and pension coverage to people belonging to lower strata of society. These schemes have not only provided social security, but have also increased awareness about insurance and pension products. Pradhan Mantri Suraksha Bima Yojana has enrolled 55.19 crore individuals for accidental coverage at a nominal rupees 20 annual premium, while Pradhan Mantri Jeevan Jyoti Bima Yojana has safeguarded 25.71 crore lives with 2 lakh life insurance. The Atal Pension Yojana boasts 8.41 crore subscribers, with nearly half being women, securing retirement for the informal workforce. Our progress is also visible in the strengthening of microfinance institutions, the deepening of rural credit through self-help groups, and the growing visibility of women as economic participants. SHG Bank Linkage Model India has reached 17 crore families through 1.44 crore SHGs, 86% of which are women. The outstanding loans to SHG stand at 3.18 lakh crore as of last month. Access alone is not inclusive. As we stand, we must focus on quality, usage, consumer protection, and long-term financial resilience. The first, bridging the gap. Bridging the last mile usage gap is essential. Millions have bank accounts, yet many remain underutilized. Encouraging sustained account activity requires strengthening digital literacy, building trust, and ensuring that financial services are intuitive, reliable, and linguistically inclusive. Second, the next frontier is credit inclusion. India needs innovative, responsible, and data-driven credit models that can serve small enterprises, new to credit borrowers, and the informal sector without exposing them to predatory practices. The account aggregator framework and cash flow based lending must be scaled up with robust governance structures. Pre-approved loans tailor-made for new account holders having little credit history will help create inclusion. Third, microfinance and pensions must become mainstream. Financial resilience, protection from health shocks, crop losses, accidents, and old age vulnerabilities will determine whether inclusion leads to stability or indebtedness for our people. Fourth, we must reinforce cybersecurity and consumer protection. As the digital transactions become universal, safeguarding citizens, especially first-time users, from fraud, misinformation, and coercive lending practices must be a regulatory priority. Fifth, policy coordination between the center, states, regulators, banks, and fintechs would be crucial. The financial inclusion agenda today spans payments, identity verification, credit, insurance, and digital infrastructure. This demands integrated governance frameworks rather than siloed interventions. The importance of institutional governance becomes central to ensuring that inclusion efforts are meaningful, accountable, and enduring. Institutional governance, at its core, refers to the structures, policies, and mechanisms that guide how financial institutions operate, coordinate, and deliver services. Without strong governance, inclusion can actually remain fragmented, inconsistent, even risk-prone. Sound policy and the regulatory frameworks form the bedrock of good governance. Regulators such as RBI, SEBI, IRDAI, NABARD, and others create an enabling environment where innovation can flourish without compromising stability. Initiatives like priority sector lending norms, PMJDY, DBT architecture, and digital KYC standards exemplify how policy has steered financial systems towards inclusivity. We all must recognize the importance of institutional capacity building. Inclusion requires new skill sets, digital literacy facilitation, burst of delivery, customer protection, and risk management in underserved areas. Institutions like NIBM, BHARAT, and ASCI have been instrumental in strengthening human capital needed to deliver last mile financial services. In today's technology era, digital governance and oversight are indispensable. Platforms like Aadhaar, UPI, India Stack, and the BC model has redefined outreach, but they also require strong standards on interoperability, cybersecurity, data protection, and grievance redressal. Technology succeeds only when trust is ensured. Another critical pillar is consumer protection. Institutional governance ensures transparent processes, ethical lending, and reliable grievance redressal systems. When citizens trust the system, they participate more actively in formal finance, creating a virtuous cycle of inclusion. Robust governance requires monitoring, evaluation, and data-driven decision-making. Dashboards, geospatial mapping, periodic review mechanisms allow policymakers to identify gaps, assess impact, and continuously refine strategies. Responsible data governance ensures that sensitive information is used ethically and securely. Let us continue to strengthen our institutions, innovate responsibly, and uphold the highest standards of governance as we move forward a more inclusive financial future. India has built one of the world's most inclusive digital financial ecosystems, which is wide-ranging, affordable, and innovative. But the next chapter calls for deeper usage, stronger protections, and more equitable access to credit and risk mitigation tools. India should continue to work together to ensure that financial inclusion in the country is not just a milestone achieved, but a dynamic, evolving path towards shared prosperity. Financial inclusion is a moving goalpost phenomenon. Initially, while providing bank accounts alone was the goal, now the goal is expanded to provide all the financial services at affordable cost like accounts, transactions, insurance, pension, and credit availability without collateral. With increase in income levels and awareness, complex financial instruments will come within the reach of common man. The challenge for financial inclusion efforts will always remain to ensure the affordability of products and imparting of related financial literacy to individuals at the lower end of the society. Financial inclusion, when implemented as a coherent public policy, serves the common good by fostering inclusive growth, reducing inequality, and enabling sustainable economic development. It is not just a financial imperative, but a moral and social one, paving the way for a fairer society. Friends, it is a great honor to me to speak to you today and share some of my personal thoughts with all of you. I thank ASCI for giving me the honor of delivering the 69th Foundation Day lecture. I'm so unhappy that I'm not able to be present personally. And thank you so much once again. Jai Hind.
Thank you, Mr. Nagaraju Garu, for the fascinating speech. Well, financial services has been a great success. It's a success story of India, there is no doubt. In fact, not only of India, but of the world. Because the amount of rapid bank openings and then bank accounts openings and all these things and the access is fantastic. But at the same time, the banking fraud and the cyber crime also is increasing in a way. I think this is an area where you may like to concentrate. The other point I wanted to mention is, I'm just trying to bring it to your notice. LIC is a huge organization, but the LIC correspondence with the people is still, that old type pages and then sort of perforated these things. So I think they should go into more modernization and digitalization, LIC. The pension one is a great, this one again, but I'm trying to say that how they can be improved. It is a first-class service. When they release the pension every month, the banks, some of them do not give any details of pension. They just give one gross figure saying that 2 lakhs of rupees or 1,50,000 has been credited to your account. Some banks give the details also, saying that, income tax and DA and all those things, and then net, this is the one. So I think you should insist that all banks which are dispersing pension do this, directly. Because my own bank, IDBI, what happens is, I have to go to their website and then open something, and then only I would get the details of this. But that's not necessary. I think it can be improved, So some of these points I wanted to bring to your kind notice. But you are doing a fantastic job, and hats off to you. And the extremely busy schedule of Delhi, you found time even to talk, at least to talk online. So I am most grateful to you, and we all enjoyed it. And thank you, and wish you all the best. Thank you.
Thank you, sir. Thank you very much. I will keep this mindset, these 3 points. In fact, LIC, we are, by next couple of months, the LIC behemoth will become completely digital. Both buying of products and receiving the benefits will be completely digital. Like SBI, kind of a thing, we are actually launching it. And this last month I was supposed to launch, but could not, but perhaps December or January will be launching it. Completely digital makeover of LIC. And secondly, let me also tell you, the 2 of SBI, we are already under pilot stage last 5-6 months. Again, completely new age banking experience we are going to provide through SBI to everybody in the country. That will be one of the most envied app that we are building. We have actually built it. It is under usage by our staff, and we publicly will launch shortly that. And cybersecurity, I share your concerns, sir. Cybersecurity has been a growing menace for everybody. We have been conducting large number of awareness camps. And to further prevent, we actually this month, we launched, last month in fact, registered a new entity to prevent cyber crimes in the country. It's called DPIP, Digital Public Infrastructure Platform. And this is ensures that the sources of cyber crimes are identified and prevented before they actually happen, and ensure our systems are more resilient for the cyber attacks. That we are doing. Pension, of course, I get to your points. I think I don't know which banks are giving details, which are not giving, but I will ensure that all the banks, both public and private, provide full details of the pensions, including the how much is received. And once again, I thank all of you. In fact, today we had a big meeting on the insurance opening up sector, which I got actually positive approval. So we'll shortly going to the parliament for doing something more. And I think maybe next week we'll all know about what we are doing. Thank you very much. Thank you, sir.
Esteemed friends, on behalf of the entire ASCI community, it is my pleasure as well as a privilege to extend our thanks to the chief guest and for his insightful and stimulating lecture. During our lifetime, we have seen two transformations in India. India is proud to come out of abject poverty. We are not in that poverty trap of the past. And today, the Indian economy is the fastest growing economy. We have overtaken even China. And all this is possible because of the digital backbone, the digital financial infrastructures and financial inclusion. It's a great story to celebrate, as we also celebrate ASCI's